y'all, this is Rich Bond with Security National Mortgage. I want to talk to you today about 203K loans. 203K loans are pretty near and dear to my heart because basically you can turn a distressed property, a foreclosure, a short sale, maybe even a property that the owners just didn't love and care for into your dream home. It's kind of neat. Now, let's imagine that you've got one of these three properties here. They're wrecked. They probably haven't been occupied for a while. They kind of look rough. Most people wouldn't give them a second look. But with a little imagination, you can turn those into these. So as a lender, why do I care about a 203K mortgage? Number one, there's a ton of foreclosures out there. A good buddy of mine, Jim, was telling me that there's over 100 foreclosures just in Katy that would qualify for this 203K. There's a ton of short sales out there. Chances are, if it's a short sale, the folks who own the property probably haven't cared for it that much. And you may want to be able to customize it to your own needs and desires. Finally, there's a bunch of real estate owned inventory. There's all sorts of rentals out there. There's a lot of great opportunities with this 203K mortgage for you to turn a home into your castle. So what are the challenges? Right now, a lot of entry-level buyers have been forced out of the foreclosure market because of distressed cash-only listings. It's not fair that you, somebody who wants to live in the house, can't bid on it because you don't have $50,000 or $70,000 laying in the bank, and some investors are going to be able to snatch up this great deal. A lot of loan modification efforts have underachieved their desired goals. This shadow inventory, what that is Fannie Mae, Freddie Mac, and FHA have foreclosed on homes and they haven't put them on sale yet because they don't want to drive down prices. This is growing and it's expected to hit the market soon. By going in and buying these homes right now, what you're able to do is you're able to lock in a really great value and prevent that drastic drop. A third of the nation's housing stock is between 25 and 45 years old, and another third is more than 45 years old. That's from the Harvard study. That tells me right there that a lot of homes are going to need a little bit of love. And finally, a lot of properties have not been well maintained. They have unpermitted additions or they've been vandalized. Now, my Uncle Larry used to tell me that there are no such thing as problems, just opportunities. I think that this Bob Bodine said it a little bit more eloquently, but this is something I've lived with since I have been really young. I remember being told that there are no problems. The only thing that you have is an opportunity to make your day or somebody else's day better. So what is a FHA 203K loan? It's a gift. You know, have you ever gone into a home and said, you know, this location looks great, but oh my gosh, this house is awful. Run over to Home Depot. Get some color swatches, maybe some cabinet treatments and some tile samples, and go back in and dream about what you can do with it. For example, you can take this home and you can take just the bathroom. What would you do to make the bathroom nicer? What would you do to make the kitchen nicer? How can you visualize this being a perfect home? This is a gift to you. You can basically give yourself everything that you want that the home currently doesn't have. What do you want in your home? You want new paint, new carpet, windows, doors, appliances. Maybe a deck, kitchen, or a bathroom remodel. You can design the home the way you want it. Now, I'm not going to lie to you here. Most home buyers close broke. Now, I'm not saying that they don't have two pennies to rub together. They've got a little bit more than that, but they don't have enough to take on a major renovation project. So a lot of times it's going to be stretched out 2, 6, 10 years. A lot of folk are going to go over to Home Depot. They're going to get one of their credit cards with 0 interest for the first 6 months. And when they hit month 7, they're going to get slammed with 22 to 30% interest back to day one. Now, let's say that this person goes to Home Depot. They get an $8,000 credit card. The minimum payment on that bill is roughly $200. Now, if you were to tack on an additional $30,000 onto your mortgage for home improvements, your mortgage only goes up $200. And for most people, it's tax deductible. So think about it. $200 to do $30,000 worth of improvements. That seems like a pretty good deal, doesn't it? Would you buy a house that looked like this? How about this? I know that you love this kitchen. Everything except for the fact that it's dirty, the appliances are old, the yellow and I call that, I guess, seafoam green with the bright orange tiles have been really fashionable in like 1973. Other than that, it's a perfect kitchen. This is your opportunity to go in, tear it out, put in updated, upgraded appliances, get rid of that color that's giving me nightmares from Finding Nemo, and make it something that you'll like. The FHA 203K is the most important, least utilized government loan that can help save our housing economy in 2012, help save the market. It's going to revitalize the nation's housing stock. It's going to create homeownership opportunities. You don't have to worry about pre-foreclosure repairs or pre-purchase repairs. The house is appraised as repaired. So you get to take advantage of the value of the home after all the work is done. All repairs are completed after closing by the contractor and with your guidance. And this is going to create jobs in the local economy. That's really important. Think about how great Texas job market is right now and how much better it can be if we're putting all these wonderful Americans to work by helping fix up these homes. So, you want me to tell you more? It's a lot easier than you think. Simply put, this is an FHA loan that includes money for home improvements and repairs. How's it different? You, the buyer, qualify for a larger loan amount that includes money to renovate the house. The appraisal is not based on the purchase price but the repaired value. So that equity that you're buying into the home, that you're getting the home with, that's going to be taken into consideration when you're getting your rehab budget. And in certain conditions, we're going to lend up to 110% of the as repaired value. Don't count on it. It happens really rarely, but it's a guideline I want to let you know about. So why would FHA insure a loan on a property that's fallen apart? Number one, we've had a qualified inspector, a 203K consultant, come in and do an itemized report for basically saying, these are all the things I see wrong. Secondly, I've got a licensed contractor who's come in. He's agreed to do the work on the report for a specified price. And finally, you, the buyer, you're qualifying for a loan which includes not only the purchase price, but also the cost for the improvements. Basically, what we've done is we've buttressed everything up, and we're going to add a contingency reserve. This way, if something was overlooked, we've got the funds to get it done. So what are the benefits of renovation financing? The property is going to close as is. There's no repairs needed. Let's say we find some termite-conducive issues, like a little bit of wood touching the dirt. We don't have to fix it before closing. If all the appliances are pulled out of the kitchen, they even took the cabinets, that's okay. We can fix it. If they stole the toilets out of the bathroom, we can fix it. If the slab has been cracked, we can use a standard 203K mortgage, and what that will do is that will help with foundation repair. Let's say a quarter of the house burned down. We can fix it. We can rebuild it. Heck, we can even add a second story to the home. If the well and septic work is needed, we can do that. And if there are code violations, we can update those as well. So what are the benefits to you, the buyer? I was telling you about our customer from a couple years back. She's paying taxes on an $80,000 property value, even though the property is worth $160,000. So that's a huge savings on the monthly mortgage payment. Secondly, you can get green tax credits for a lot of different products. You can customize and modernize your home to your taste. You can finance up to 6 months of the payments while the house is being renovated. It's easier to qualify, and you can bring the house, you can basically get a lot more homes on the market because of the ability to do this. So what's the process? I'm not going to go over everything here, but basically give me a call and we will walk through it. What are the eligible properties? Attached and detached single-family residences, even 2 to 4 unit properties, and in some cases we can do renovations on the interior of condominiums. So, required improvements, what's going to happen? The 203K consultant is going to visit the property and review the minimum health and safety requirements as determined by HUD. For example, we're going to look at termite work, well and septic if you got it, make sure there's smoke detectors, plumbing, heating, electrical systems, and air conditioning all have to work. Windows, doors, roof, and foundation have to be sound, and we're going to determine whether or not the paint and flooring is hazardous or not. Then you get to put your wish list in. You want to upgrade windows, doors, flooring, kitchen cabinets, countertops, remodel the bathroom. You can do painting, landscaping, no hardscape, okay? No big outdoor kitchens or pools, fencing, roofing, etc. You can add on a room. You can add on a second story. There's a minimum of $5,000 of repairs, but seriously, let's take advantage of this and make your home more energy efficient. You can do window coverings, blinds, even an indoor jacuzzi tub. As long as it's not considered a luxury item, for example, you can't use this to add a walk-in wine cave or humidor, then you're pretty good. You can update and lighten up a kitchen. That was one of my favorite things that was done. Now, there's two types of 203Ks. You've got the Streamline and the Standard. The Streamline is for less complicated repairs, no structural improvements. The HUD consultant is recommended but not required. I'm going to state right now, use the consultant. You have to have a home inspection. You cannot finance any mortgage payments into the loan. And the maximum repair budget is $35,000, which means $31,000 in total repairs plus all your different soft costs. That's your contingency, contractor fees, etc. So what are Streamline eligible repairs? Plumbing, electrical, windows, doors, insulation. You can add a well or septic tank, replace the roof, gutters, and downspouts. You can add or replace floors, maybe put wood floors in instead of linoleum. You can landscape and do some improvements there. You can make it handicapped accessible or make energy conservation improvements. What can't you do? Once again, that walk-in humidor, gone. You can't do a major remodel or rehab. You cannot move a load-bearing wall. You cannot do a room addition. You cannot repair a foundation. And you've got to be able to have the work done within 30 days or less. The work must be done by a licensed contractor. For plumbing and electrical, general contractors here in Texas do not have licenses. They have to have general liability, workers' comp, and they have to have a bid equal or less than the consultant report on the contractor letterhead. And they have to give us a W-9, a contractor agreement, and the contractor must attend the closing. So, this is kind of how it works. Basically, we have a renovation account that goes and pays everybody, and we fund that up front. Okay, so what happens after closing? Your file is sent to a disbursement specialist. The welcome package gets to you within 45 days. You can request half of it for each contractor up front, and the next draw is about 45 days later. The inspections are required for the second draw, and there's a maximum of 2 draws on a Streamline 203K. Standard renovation, 45 days after closing, you can get the package. There's a 10% holdback, and the draws are done in a reimbursement type fashion. So let's say you're buying purchase a home for $150,000. The renovations cost $40,000. You're paying $66.50 as a down payment. $183,350 is your loan amount. The house has got to appraise at the most for $172,750. Can we do it? Yes, we can. Or what we can do is, let's say that same house for $150,000, $40,000 renovation. The acquisition cost is $190,000, down payment of $66.50. We got a loan amount of $183,000. The house appraises for $220,000. By the way, this is a real scenario I've worked on. You are walking in with $36,000 in change in equity. So, have your realtor call me about writing the offer. Now, here's what we need to do. In order to close on time, everything has to be fast. Termite inspection, contractor's bid, get your insurance early. We can close in 45 to 60 days as long as we get this stuff done quickly. We can help turn a distressed REO into a family home. A rundown kitchen into a gourmet kitchen. Now, why aren't people talking about this? Because they're afraid of it. It seems like there's a lot of work to it, and they don't have a good guide. Okay, this is what we do gives us great meaning. It's a win for you, a win for the community, a win for the seller, and a win for the economy. What I'd like you to do, if you want more information, is get in touch with me. My information's in the beginning of the slide or down in the description. This is Rich Bond. Thank you so much, and have a great day.